Good afternoon, YouTubers. Benjamin Youngman here with my ASX stock pick for February 2019. Today we have two stocks that I'm going to be talking about. First and foremost, a company called Zipco Limited, stocker code Z1P, currently trading at $1.20 today on the 8th of February 2019, with a market cap of 384 million and ranked number 411 on the Australian Stock Exchange. Zipco Limited. Some of you may have heard of this company. It's Afterpay's little cousin, slowly catching up, but surely. You've all heard of Afterpay, I imagine. You've probably heard of Zipco as well. These are basically platforms where fintech companies, platforms where you can go into a retailer and get assistance from your app that's downloaded in order to pay for products in store with an option to pay off the balance over a period of time. The reason I'm not going to buy Afterpay right now is it's valued at over $4 billion and they are not yet profitable. While they are one of the fastest growing tech companies Australia has ever seen, their business model, I don't believe, is as efficient as Zipco. Zipco, again, has a market value of 384 million. Some of the differences with Zipco, you'd probably purchase larger items. You could go in store and buy something for $3,000 or $4,000 with no money down, be approved by Zip within minutes, be taking that furniture or item home, whether it's a computer or a lounge suite, and you have a longer period of time to pay, sort of over a year, 2 years. Now, they say they're interest-free, though there are late fees for late payments, and they also make money off the retailer. So that's more their business model. Whereas Afterpay, when you buy in store, I think you have 4 or 5 installments over 4 or 5 weeks to pay down that item. So it might be more something where you're going to spend $300 or $400 or $500 and you don't have the money on the day that you pay over 4 or 5 weeks in installments. So they both have their pros and cons. Zipco is a highly speculative pick for me. I wouldn't normally pick something that's not that profitable yet or has not been around long enough to experience years of profitability, dividends, and so on. It could be a rocky road while this company grows, but Zip is one of the fastest growing fintech companies in this country. And when Afterpay has a market cap of 4.5 billion, I think it is today, over 4 billion, and Zipco has a market cap of just over 300 million, I believe the room for growth and the model has been proven out. In other words, proof of concept is already there. These models do work. Zipco has been underwritten by NAB, backed by NAB. Again, they are one of the fastest growing tech companies in this country. They're very young, but they're growing fast and they're catching up. They're gaining market share. Zipco are used by Kogan, Officeworks, Bunnings. They're in a lot of the big retailers in Australia. And when they do start to expand, if they decide to, which I'm sure in time they will decide to expand overseas, you'll watch that stock price basically explode and that market cap grow. I believe Zip can do it. Their price may go down or up in the short term. I think if you look back in 2 years from now, it's a great purchase. Again, these videos are not financial advice. I'm not a financial planner or advisor. Rely upon your own inquiries and do not buy any of these stocks because I buy them. This is simply for entertainment value, and this is my opinion. Do research and rely upon your own inquiries and make decisions based on your own goals and objectives. Zipco is trading today at $1.20. I bought this stock recently, only a couple of weeks ago, at about $1.07 or $1.10. But again, over the last year, it's only had about a 6% return on that stock price. It's outperformed the ASX 200 by about 7%. So not thrilling, though, again, very young, and you'll see Zip start to pop up in your local retailers if you haven't already. So I'd rather buy 1,000 stocks of Zip for $1.20 a piece than go and invest in Afterpay right now. And that may be a mistake. It may not be. I believe there's a lot of hype around Afterpay as well. So Zipco is my first pick. My second pick for February is Kogan. Now, most of you investors would have heard about Kogan. It's been a bit of a bumpy ride for them as well. Kogan, ticker code KGN, ranked 379 on the stock exchange at a market cap of $436 million. Now, Kogan peaked around March last year at $9.85, and ever since then has been coming back a long way. It dropped down to $2.72 in November, and I picked this stock up in late October for $2.90. It's currently trading at $4.42 with a price to earnings ratio of about 31. Gross dividend yield of about 4%. With Kogan, the owner Ruslan Kogan, did sell off a lot of shares last year, which made a lot of investors nervous, and a lot of people sold out in a bit of a panic. I think it was probably more strategic than it was a crazy, panicky sell-off from him. I think he knows what he's doing, and he may have needed that money to move on with the next part of his business. But who am I to question the guy? He can do what he wants. I bought this stock at around $9 and sold it around $9 early last year. I thought it was a bit pricey, and I was a bit nervous as well about how fast it was growing. I didn't think it could sustain that growth acceleration that quickly for a long period of time. So I sat back and waited. And again, I picked it up at $2.90 back in October. Ruslan Kogan started Kogan.com 13 years ago. Okay, 13 years ago, he started working out of his parents' garage in Melbourne. Today, he has a company worth over $400 million on the Australian Stock Exchange. Sometimes you've got to back the jockey. It might not be a smooth ride with Kogan. It might be some ups and downs. Looking forward 10 years from now or 5 years from now, will Kogan be around? Yes, I believe so. Will Amazon squash Kogan? I don't think so. I think it will complement his business model. He's a genius at customer acquisition. He has at last annual report last year, he had over 1.35 million active customers. That's a huge market share. The guy is a customer acquisition genius. And that's about double the customer base he had 2 years prior. The guy grows with speed. He is a genius. He really is. His gross margin, he's improving. I think it's 19.5% gross margin. Very good return on equity. So here we are. Active customers in April 2016 were 650,000, and in 2018 were 1.35 million. His annual report will come out on the 21st of February in a couple of weeks' time. Even if his growth slows down, if Kogan's growth slows down, the company has been growing at such a rapid rate that even if it slows down slightly, it will still be growing well. So in 2017, Kogan had a gross margin of 17.9%, and in 2018 it grew to 19.5%. Total revenue in 2017 was 289 million, and in 2018 was up 42.5% to 412 million in revenue, and earnings of 26 million, up from 12.5 million. So earnings are up 108%. There's not many companies growing at that sort of speed that are profitable. So I think the stock price is still fair, trading today on the 8th of February at $4.42. Could it go down from here? Possibly. We'll see what his annual report or his interim report says on the 21st of February. If it's not up to investors' expectations, the price could drop. If it's a good report, the price could skyrocket. Investors are a very trigger-happy bunch. But I'm sort of in Kogan for the long term. I think over the course of the next few years, he's going to continue to grow and do well. It's a great company. It's a unique company. And I like it. Let me know what you think. Comment below. Hopefully my timing's right with these stocks. I think Kogan can go up and away from here. Lots of room to grow. And like I said, the guy's good at what he does. started 13 years ago in his parents' garage, and now he has a huge company. I believe eventually it'll be $1 billion company, but it is early still. Give him a few years. Comment below, see what you think. Happy investing, and thanks for watching.